Hi all, welcome to this session. In this today's session, we are going to discuss the difference between US GAAP and IFRS. US GAAP and IFRS both are well established accounting standards. So there are some key differences also there between IFRS and US GAAP. In this today's lesson, we are going to discuss what are the key differences between the US GAAP and IFRS and on which aspects they have differences. So the two key financial relevant CMA learning areas are financial reporting frameworks and difference between IFRS and US GAAP and impact of accounting standards on financial reporting and analysis. Financial statements are prepared according to accounting standards. Two of the most widely used frameworks are International Financial Accounting Standard and US GAAP. These are the two commonly used accounting standard frameworks. Why we have to follow a framework for accounting? It is to ensure the transparency and comparability and improve the quality of financial reporting. If different organizations follow different standards method for accounting, the accounting statement comparison may not be reliable and accurate. And also there will be a big chance to have errors or errors in the reporting. To avoid this, it is mandatory to follow certain accounting standards. The IFRS and US GAAP are one of the commonly widely used accounting standards over the world. As a CMA student, interpreting these standards is essential for interpreting international financial statements, comparing companies across countries, and answering exam questions related to accounting frameworks. If you are comparing a financial statement between one country which is following IFRS and other country which is following US GAAP, so understanding these key differences between IFRS and US GAAP is very essential to have a very reliable and transparent comparison. The key learning objectives of this lesson: identify standard setting bodies responsible for IFRS and US GAAP. There are two different bodies which is setting standard for IFRS and US GAAP. So today we are going to familiarize with those bodies and explain the difference between principle-based and rule-based accounting. IFRS is mainly principle-based and US GAAP called as rule-based accounting system. So today we are going to explain or understand what is rule-based and what is principle-based accounting system. Compare inventory accounting method allowed each framework. This is one of the key difference between IFRS and US GAAP, that is into inventory valuation. Certain method like LIFO is not allowed in the IFRS, International Financial Reporting Standard, but it is allowed in US GAAP. Then the understanding difference in accounting for property, plant and equipment and development costs. So there are some accounting for property, plant and equipment and related to development costs, how it should be treated. So there are some differences in IFRS and US GAAP. In this lesson, we are going to discuss these differences as well. Recognize how impairment rules differ between IFRS and US GAAP. The impairment of asset. Impairment means if the asset book value is 100,000 and its market value is 80,000. In some cases, the impairment is allowed and some cases it is not allowed. And also the reversal of impairment also is allowed in one accounting standard and in other accounting standard it is not allowed. So today we are going to cover this, how the impairment is treated in IFRS and US GAAP. So before moving into differences, we have to understand that what is IFRS and what is US GAAP. IFRS is standard setter, it is International Accounting Standard Board. IASB is the standard setter for IFRS. Primarily it is using more than 150 countries over the world. More than 150 countries are using IFRS. And US GAAP, the standard setter is Financial Accounting Standard Board, that is FASB, and it is used mainly in the United States. Both the organizations aim to improve transparency, comparability, and quality of financial reporting. However, they follow different approach when creating accounting standards. In certain standards, they follow different approach, like we discussed in inventory valuation, valuation of property, plant and equipment, impairment. There are some areas which is following different standards or different approach when creating accounting standards. And the principle-based versus rule-based accounting system. IFRS considered as a principle-based accounting system, but while US GAAP is a rule-based. What is principle-based? What is rule-based? Principle-based means there are key principles already set in IFRS. Based on that principle, you have to do some professional judgment to have a clarity on some treatment on some accounting standards. While the US GAAP, which is role-based, the roles or in this US GAAP, the professional judgment requirement is very less because it is already rule-based. For each cases which is already set a predetermined rule for accounting treatment. So there is no requirement for more professional judgment in US GAAP. But while come to IFRS, which required more professional judgment to have a final conclusion of treatment of accounting entries. The IFRS considered as a principle-based accounting system and US GAAP is rule-based. When it comes to flexibility, IFRS has more flexibility because it is principle-based. While the US GAAP is rule-based, which doesn't have much flexibility like IFRS. Then the professional judgment. In IFRS, professional judgment more required. But in the US GAAP, it is less required only because it's already rule-based. Based on the rule, you have to select the accounting treatment. Guidance. It is board principles. IFRS is based on board principles, and while it comes to US GAAP, it is based on detailed rules. That's why it is called IFRS as called as principle-based approach, and US GAAP is called as rule-based approach. Now, principle-based system. IFRS focus on general accounting principles that emphasize economic substance of transaction. The key advantages of IFRS is greater flexibility, better reflection of economic reality, because it has flexibility to reflect each business case separately. But when it comes to disadvantages, which required more professional judgment than US GAAP and may result in inconsistent interpretation. There have a big role for interpretation in IFRS. So which required more professional judgment and it can create inconsistent interpretation as well. When it comes to US GAAP, which provide detailed guidance for specific rule for many accounting situations, which already have very detailed rule for different accounting situations. The key advantages of US GAAP is reduce ambiguity and improve consistency across companies because which already have very detailed accounting situation case by case for each specific rule. So once a case come in the US GAAP, we have to directly follow that rule instead of your own evaluation and judgment. Key disadvantages of US GAAP can encourage strict rule following even when it does not reflect economic substance. There is no flexibility in US GAAP compared to IFRS. You have to follow specific rule, but some cases which may not reflect exact economic substance. So this is about the IFRS and US GAAP. Now we are going to the key differences between IFRS and US GAAP why it's come to financial accounting or financial recording. First thing is inventory accounting differences. When it's come to inventory accounting, there are some key differences between IFRS and US GAAP. As we know, there are some inventory valuation methods are there like FIFO, weighted average, and LIFO. FIFO means first in, first out. Weighted average means the inventory cost is calculating based on weighted average, and LIFO means last in, first out. In IFRS and US GAAP, both IFRS and US GAAP, FIFO is allowed. In both IFRS and US GAAP, weighted average also allowed. But when it comes to LIFO, in IFRS, LIFO is not allowed, and in US GAAP, LIFO also allowed. So in inventory valuation, the key difference is the inventory valuation method, that is LIFO, which is not allowed in IFRS, but it is allowed in US GAAP. IFRS prohibits last in first out method because it may result outdated inventory cost appearing in the balance sheet. In the last in first out, what is happening? It assumes that the last come inventory is sold first, which may result outdated inventory cost appearing on the balance sheet. That's why IFRS is not allowing FIFO. But in US GAAP, even FIFO also allowed. You can see an example here. If a company purchases inventory as follows, 10 units at the rate of $10, 100 units at the rate of $10, 100 units at the rate of $12. The company total sales is 100 units. In the FIFO, the inventory cost is 100 into 10, that is 1000, and ending inventory is 100 into 11, that is 1200. In the US GAAP, LIFO also allowed. When it comes to LIFO, in this case, the cost of goods sold will be 1200. That means the last purchased inventory is considered as sold first. And the ending inventory is 100 into 10, that is 1000. So the key financial impact is, in the FIFO, cost of goods sold will be lower in an inflationary environment, and in LIFO, the cost of goods sold will be higher in an inflationary environment. So the net income will be the opposite of this. In the FIFO, it will be higher, and the LIFO, it will be lower. When it comes to inventory valuation, the key difference between IFRS and US GAAP is allowance of LIFO inventory valuation method. In IFRS, LIFO is not allowed, but in US GAAP, LIFO also allowed. Now let's move into another difference, that is property, plant and equipment. How to treat the property, plant and equipment. Both accounting framework initially record PPE, property, plant and equipment, at historical cost. However, they differ in how asset can be measured after acquisition. Both accounting standard keep framework initially record PPE, property, plant and equipment, at the initial historical cost, or what is the total acquisition cost. When it comes to measurement model, when it comes to revaluation, in IFRS, the revaluation of property, plant and equipment is allowed, but in the US GAAP, which is not allowed. That means, if the asset price, you've purchased a machine for 100,000, and the fair market value increased after it into 130,000. In IFRS, revaluation gain record in other comprehensive income. There is a revaluation gain here, that is 30,000, which is record as other comprehensive income. But in the US GAAP, asset remain record at historical cost. In the IFRS, the revaluation, there is a scope for revaluation of asset value, but in the US GAAP, there is no scope for evaluation of asset value. That means, in the US GAAP, asset remained recorded as historical cost, whether its cost increased or whether it is fair market value is increased than the historical price as well. So this is the key difference between in the revaluation between IFRS and US GAAP, the treatment of revaluation. That means the IFRS revaluation gain recorded in other comprehensive income, but in the US GAAP, asset remain recorded at historical cost. Let's move into other next key difference, that is research and development cost. Accounting treatment for research and development differ significantly between IFRS and US GAAP. In both standard IFRS and US GAAP, research expenses are expenses. Research costs are normally considered as expenses. But when it comes to GAAP, development costs, IFRS can be, in IFRS, the certain costs can be capitalized if the certain criteria are met. But even in the US GAAP, still it is expensive. So the research expenses have similar treatment between the IFRS and US GAAP, that is both are expensive. But in the development cost, in IFRS it can be capitalized if the certain criteria are met. In IFRS, development costs may be capitalized when technical feasibilities exceed, company intend to complete the project, future economic benefits are probable, and cost can be measured reliably. So if these conditions are met in IFRS, the development cost can be capitalized. But in the US GAAP, it has to be expensive. There is no scope for capitalization in US GAAP. Let's look into this example. If a company incur research cost 400,000 and development cost 600,000, in IFRS framework, 400 is treated as expenses and development cost 600 can be capitalized. But in the US GAAP, whole 400 plus 600, that is 1 million, has to be expenses. There is no scope for capitalization of development and research expenses. Now let's move into asset impairment. Asset impairment occurs when the asset carrying amount is exceeded its recoverable values. Asset impairment means suppose you purchased asset or your book value for asset is 100,000, but the current market value is suppose 75,000. So in this case, you have to impair the asset value. That means you have to reduce the asset value into market realizable values or market value. In the both accounting standard, impairment testing is allowed, but the reversal of impairment is not allowed in the US GAAP. In the US GAAP, in both standards allowing to impairment testing of asset values, but the reversal of impairment, suppose this is on 1st January, on 31st December, suppose the market price went high to 90,000. In this case, the US GAAP is not allowed to reversal of this impairment to 90,000, but the US GAAP is not allowing, but IFRS is allowing the impairment, reversal of impairment. Just look into this example. Asset carrying value is 80,000 and market value fall to 60,000. So the impairment value loss of 220,000 is recorded in both accounting standard, in IFRS and GAAP. If the value later raised to 75,000, in the IFRS reversal is allowed up to 75,000, but in US GAAP reversal is not permitted. The reversal is not permitted in the US GAAP. That is the key difference in asset impairment treatment. Let's move into practical question, multiple choice questions. Which inventory method is allowed under US GAAP but prohibited under IFRS? FIFO, weighted average, LIFO, and specific identification method. That is LIFO. The answer is LIFO. LIFO is prohibited in IFRS, but it is allowed in the US GAAP. Question 2. Under IFRS, development costs can be capitalized when management prefer capitalization. Option B. Future economic benefits are probable and feasibility is established. Option C. The project enter the research phase. Option D. The cost cannot be measured reliably. Here the answer is option B. The future economic benefits of a project are probable and feasibility is established. In this case, in IFRS treatment, the development costs can be capitalized. Question 3. Which statement about property, plant and equipment is correct? Both IFRS and US GAAPs allow revaluation. Only GAAP allowed revaluation. Only IFRS allow revaluation. Neither allow revaluation. Here the option C is the correct one. Only IFRS allow the revaluation, but in US GAAP it is not permitting reevaluation of assets value. Before winding up this discussion, let's have a quick summary. What we discussed today is the key difference between the IFRS and US GAAP. IFRS is principle based while the US GAAP is rule based. IFRS is principle based means there are certain principles are already set in IFRS. So you have to do your own evaluation and judgment for some accounting cases. While the US GAAP, most of the cases are already predetermined in the US GAAP. So you have to choose that rule based on your situation. LIFO inventory is allowed only US GAAP. Last in first out inventory methods allowed only in US GAAP, which is not permitted in the IFRS. IFRS allows asset evaluation to fair value, but while US GAAP uses historical cost only. If the asset value get increased, you can reevaluate the asset value into fair value in IFRS, but in US GAAP, which is not permitted. The asset value remain as historical cost in the books of account. Development costs may be capitalized under IFRS, but are expensed under the US GAAP. The development cost can be capitalized under the IFRS, but it must be expensed in the US GAAP. Then the impairment reversals are allowed under US GAAP, but not under US. Impairment reversals are allowed under IFRS, but not under US GAAP. You can do impairment in both standards, but the reversal of impairment is allowed only IFRS, not in the US GAAP. You cannot do reversal of impairment in the US GAAP. So this is about today's discussion. If you have any doubt or you need any clarification on any of these topics, please ask me on the comment section. Thank you for watching this video.